Hi, everyone. Thanks so much for joining us. For those of you who don't know me, my name is Cooper Knowlton. I am an attorney, a partner at Bergstein, Flynn & Knowlton, joined today by Barry Davidoff, who is the principal at Davidoff Financial Consulting. Barry joined us, I guess it was back in March or early April. We had a webinar on the PPP when people were first starting to apply. And he's been an extremely valuable resource for us and for many of our clients, people who are looking for information on the loan and loan forgiveness. And now that the loan forgiveness, there's been a lot of updates over the last couple of weeks. We thought it was a good time to hop on a webinar and to have Barry join us and to try and unpack some of these new developments and give some clients and friends the opportunity to ask any questions they have and go from there. So I'm going to turn this over to Barry in a minute or two and let Barry share a couple of the most important new developments. But before I do, I just want to make a couple quick points. As we sort of go through all of this stuff, I think it's important to keep in mind that the loan forgiveness terms, the PPP, everything is still fluid. Everything is still happening. When the CARES Act was passed back at the end of March, it was drafted in an extremely hasty manner. There were all sorts of ambiguities, open questions, and things have changed very rapidly. If you saw the email we sent out a couple of days ago, you saw that just in the last month, there's been a new law passed about loan forgiveness, about sort of updates to the PPP. There's been new applications released in the last 2 weeks. There have been a couple new rules from the SBA and the Treasury. I think the most important thing to keep in mind is you should be starting to get your head around this stuff. You should be talking to your attorneys and accountants and any other advisors about these issues. But I think it is important to keep in mind that what we say here today may change again in the next couple of weeks, the next couple of months. It's possible there will be even more forgiveness. The terms will get even better. So I think it's just important to keep that in mind and keep in the back of your head that what we say now might not be true in 2 weeks or even 2 days. So a couple other points. The applications are they've updated the loan forgiveness applications, and those are now up on the SBA website. I would encourage anyone who has a PPP loan and is thinking about loan forgiveness terms and how they're going to take advantage of the loan forgiveness provisions to check those out, just to kind of get a good sense of what the application process is going to look like. Again, it may change. It's still unclear what the bank's roles are going to be in this process, how closely they're going to be looking at the documentation you provide. I know when the PPP was created and people were applying, there was that whole process was very fluid, and I'm assuming this process will be fluid as well. But I do encourage you to check those out on the SBA website, just because I think it's good to get a good sense of what the types of questions that you're going to be asked for and the types of information. A couple final pieces before I turn this over to Barry, just kind of as way of background. The general loan forgiveness terms when the law was first passed were you had an 8-week period, and any money spent during that first 8-week period on payroll costs, interest on mortgage, rent, and utilities was going to be forgiven. Recently and earlier this month, they've extended that 8-week period to 24 weeks. So that being said, though, if you already have a loan, it is possible that you could, I'm not entirely sure why you would want to do this, but you can still elect to take advantage of the 8-week period as opposed to the 24-week period. But it has been elongated. The other major change that happened recently is when the law was first passed, they said 60% for loan forgiveness, 60% of those costs that you were getting forgiven had to be spent on payroll expenses. It was initially 75%, and now they have reduced that to 60%. That is the other big change that's happened recently. There's a lot of conditions associated with maintaining that during this period, you must have maintained your payroll, maintained the people on your staff. There's been a lot of new developments that Barry's going to talk to us about, calculating owner compensation, employee compensation, how that works. And I guess just the last point I want to make is I know a lot of people are going to have questions sort of about like, what happens if during that 8-week period or the 24-week period, you weren't able to, 60% of my costs weren't on payroll. Do I lose my eligibility for loan forgiveness? And it seems like the answer to that question is no, but you will probably only get partial forgiveness. So that seems to be sort of the most recent guidance, that if you don't qualify for any of these provisions, it's not a binary yes or no, that you either get loan forgiveness or you don't get loan forgiveness. In all likelihood, keep in mind that you will probably still get partial loan forgiveness. And I think that sort of keys up the most important thing, again, is to make sure that you're talking to your accountant, make sure you're talking to your attorney, and understanding, because it's not as simple as just saying, no, I'm not going to qualify. You probably can qualify to some degree. So I think it's really important to sort of think through these things and talk with trusted advisors. So with that, all that being said, I'm going to turn this over to Barry, who's going to share get into a little more detail on some of the newer developments related to the loan forgiveness. And then we will open up the floor for some questions, and hopefully we'll be here for about 30 or 40 more minutes. So.
Thank you, Cooper. First of all, I really appreciate working with your law firm on all of this and providing information on PPP. What it is that it's among the most fluid areas that I have ever seen. Part of it is that no one could have ever told me back in January the government would be releasing 1.2 to 1.5 trillion, that's with a T, not with a B, dollars to small businesses with very few regulations originally and regulations that are changing on the fly. And the Treasury, SBA, and then also the banks are changing some of the regulations as we go along. So there was actually something that came out last week, which was the third interim rule on the sixth regulation, was an official title in the Code of Federal Regulations. So that's how often it's changing. And again, what I'm urging everyone to do is to obviously work with your attorneys and accountants, and also be patient, is that the terms constantly seem to be getting better for whoever the borrower is. And again, it is a very political football. So what it is that it may change, and both parties have different views on it, and they overlap, sometimes they change, but it tends to favor forgiveness more than it is favoring stringent auditing and the government getting the money back. At this point, the government seems more or less willing to give up almost all of the money. So keep that in mind, and to work in getting it and in finding the most favorable solution.
Barry, is there actually talk of complete forgiveness? Do you think that that's something
it's been raised by a couple of the Democrats. It's also been raised by a couple of mid-Republicans who are saying, hey, this is a very good way of stimulating the businesses in my hometown. And it is very good because, again, it is really intended for small business, sort of like rural America, the general store. You can get a lot of constituent approval by standing that, yes, that this loan should be forgiven. It's also giving relief to the people who need it the most, which are basically small business owners. Is that there are all sorts of other stimulus packages, such as extended unemployment, that are providing for employees. This is one of the few packages that's providing for, like, okay, let's try to keep that business going on an ongoing basis. So there's a lot for that, but a couple of the most important changes, and one of the provisions also in the law is that you get to pick and choose which provisions you want for forgiveness. So you can go with an 8-week forgiveness period, or you can go with the extended 24-week period. And the idea is that you're paying for the equivalent number of employees that you had in the beginning of the year, sometime between February 1st and March 15th, is that you need to have about the same number of employees in order for that payroll portion to be totally forgiven.
So can I just jump in for a second? So the reason you take advantage of the reason you might elect to go with the 8-week period instead of the 24-week period would potentially be if you have a smaller staff after the 8-week period. It's going to be less favorable.
You may also go with it that, like, okay, you tend to be seasonal, letting go of people in the summer.
Sure.
So, like, okay, you pick that first 8-week interval, you had everyone back in the summer, you may not need them.
I see.
And you hire back again in the fall. So it's picking whatever the time period is that is really most favorable to your business.
But I would assume that most businesses will probably elect a longer 24-week period.
The 24-week period is substantially better. Is that, again, it gives you a chance to also compensate employees at a higher rate.
Right.
And it provides just many advantages as opposed to the 8-week period. So I see maybe probably less than 5% of businesses electing 8-week period. But again, you could get an extreme case. And it's a matter of going back to the regulations. There is a thing in the actual law, it is written that the regulations at the time of the application may apply, or you have an option of using those regulations. So it's really all over the place. But essentially the main changes, as you mentioned, Cooper, were that it is now a 24-week period. And then the other part of it is that only 60% of it has to be used for payroll. The other 40% can be used for rent, utilities, and also lease payments on industrial machinery. So even if you have, for example, like a grocery store, and you're leasing the freezers, which as I understand is fairly common, you could use the money also to be paying those lease payments as well. So those are all significant changes in the law.
Barry, I see someone asked in the comment section, what about healthcare costs? Could
healthcare costs, it's basically full up salary. So you're allowed to go up to $100,000. On top of that, you are allowed to include all healthcare costs for the employees, as well as the normal retirement benefit. So if you're providing pensions on a normal basis, it could be $100,000 plus healthcare plus retirement. And again, it's all subject to the cap again for like 401s of like 18,500 a year is the maximum you can contribute. But you can basically be adding all of these things into your payroll costs, provided that this was your normal way of doing things.
Gotcha.
You also have complete freedom to reward employees. So for example, like Walmart, Target, and I think Kroger provided like a $2 an hour bonus to come in as hazard pay. You may also decide to provide, okay, I'm going to give a $10,000 bonus to someone to come in in a daycare center. You have complete freedom of salaries. It's not sticking with the status quo of what things were in the beginning part of the year. It's encouraging to be fluid as long as certain caps aren't met. Now, I also want to get into what the maximum compensation is.
Yeah.
It's a striking change in the newest regulation signed on June 5th. And what it is that you have to define between owner and employee. And the definition of owner is not defined in the regulations. There are a lot of places where it seems to be between 5% at the low side, 20% and above is definitely an owner. But those are restricted to really the 8-week period. $100,000, the maximum compensation that can be forgiven is $15,385. Now, however, for an employee, and this is a person who is strictly an employee, and that's not uncommon. I mean, I would say that that's the general rule. However, they can go for the full 24 weeks at an annual rate of $100,000, or that employee's payroll portion of $46,000 would be completely forgiven.
Wow.
So, I mean, that's a huge difference. And again, so for an owner, it's 15. For an employee, it's 46,000. And again, if anyone is in that situation and is going for the 24-week period, it figures into the calculations. Now, the other thing is that undoubtedly you're going to have to provide as an attachment or have available a payroll report on what your payroll was in the prior period and in the current period. And ADP has basically an entire site devoted to this whole issue of loan forgiveness. And if you're an ADP customer, they will provide you with great reports on all of it. And I imagine that the 4 or 5 other major payroll providers also will do it. The regulations aren't restricted to the payroll companies because, again, and they're not looking into certification. It's reasonable business records showing payments being made to employees. So those, and it's not requiring certification. Now, the loan forgiveness application itself divides into 2 categories. Is that above $2 million for the PPP? It's going to be, SBA is saying they would like to do selective audit. For anyone borrowing under $2 million, it's saying, well, be a nice guy, but the odds of audit are kind of low.
Sure.
And then you look at the commentary and SBA is really going, there's no way in the world we're going to really audit a lot of the little people. However, don't be outrageous like the Los Angeles Lakers. You know, the LA Lakers got into a lot of trouble is that, yeah, it has less than 500 employees. Several of them are extremely well compensated, and those are the 11 guys on the court. They got $8 million as an SBA loan originally, and they gave it up voluntarily. There's a lot of public pressure for that.
Sure.
A couple of the other companies had to give it up. But as long as you're reasonable in your approach, you should be able to get through all of it.
Gotcha. Someone asked in the comment section, I see someone asked, if you elect a 24-week period, but the funds have been exhausted by week 10, is that forgivable?
It's completely forgivable. It's like a max, all of these things are intended as maximal. So a lot of companies will actually use up the full amount because remember, in doing the PPP application, it was 2.5 times your payroll and utility, payroll, rent, and utility costs. So yeah, most people will use it up in 10 to 12 weeks as their normal payroll. That will be totally forgiven.
Gotcha. All right. Well, look, I think that's very helpful background. I want to open things up. If anyone has specific questions, happy to take a stab at answering them. I see a bunch of people who have just thrown some questions. Matthew, good to see you. Now that it's been extended, do you think that they will reopen and allow for further or additional loans?
The law itself provides for up through June 30th. Okay, so you only have a couple more days, and the problem was not so much the law, but the banks just ran out of steam in granting these loans. So they were overwhelmed in round 1. In round 2, there was something like $100 billion that was still outstanding. Currently, there's still about $70 billion that has been allocated for the program that may be available until June 30th. And I have a feeling it's going to be extended at least until that 70 billion or whatever the reserves are totally exhausted. I don't see how Congress could actually deny that type of extension.
Right.
And you should really count on it. And then again, if you didn't get a PPP loan in the beginning, try working with some of the smaller banks. The smaller banks tended to be more helpful than the larger banks. And one of the things that I'm advocating to my reasonably sized clients is that you really want that banking relationship. You know someone at Chase or Bank of America that you're really getting along with that did provide the PPP loan, stay with them. If you were denied and treated like a cog in a machine, go out to some of the regional banks, some of your community banks, some of your town banks, and start a relationship. Hey, I'm running this type of store. I'm running this type of business. I have this many transactions a year, and I don't want to be lost in the shuffle again. Are you interested? And a lot of the smaller banks really are using this as an opportunity to bring in new clients.
Yeah. I see a couple people asking questions. It sounds like a couple people got small loans who are self-employed or have sole proprietorships and are wondering how best to sort of think about repayment as a sole proprietor and whether they can pay themselves more than 60% of the loan.
That basically is that you're still limited to the cap of $15,000 if you're an owner, if you're a sole proprietor, if you're self-employed. So that's a major limit, plus healthcare, plus everything else.
But there would be nothing wrong if you got a loan of less than $15,000 and you're a sole proprietor. You could use that entire $15,000 to pay yourself, assuming that's in line with, if you pay yourself $7,500 every month, typically you could allocate $7,500 the first month, $7,500 the second month, and get that entire 15 grand completely forgiven.
That would be perfectly acceptable. That would be a perfectly acceptable way of doing it. And for the people who are self-employed, to just continue that way.
Gotcha. Sorry, we had a little bit of a lag there.
Okay, good. Okay, I see you again now.
Okay, perfect.
Yeah, it's perfectly acceptable.
Okay, great. What about how it squares with unemployment? We have someone in the chat room who it sounds like got a PPP loan and later started collecting unemployment. Do you have any thoughts on that?
It probably would be allowable. That there's nothing in the regulations or in the law saying that they're mutually exclusive. But you could be using the PPP loan and the unemployment as well. Both time periods would be running simultaneously. So your unemployment benefit is limited to 39 weeks. However, you could also use the PPP to supplement your other costs. And in those cases, I would really be using the 40% for other costs very strongly.
Gotcha. Has there been any clarification yet on whether expenses connected with the forgiveness of the loan will be tax deductible?
That's one of the great questions. I have a feeling that it has to be tax deductible. It can't be that, let's just say you have a major business, it's in services, you have a $2 million payroll, you've received the PPP loan, you have the $2 million in hand, and then I can't see that essentially that $2 million that you've just spent on payroll is basically no longer deductible and is adding to company profit.
Right.
So it's something that needs to be clarified, and that's something that IRS will be working on over the next couple of months.
I'm sure. There's a couple people who have asked similar versions of this. What if you borrowed less than the 2.5 average monthly payroll? You got a small loan and you've already used it up. Could you, in that instance, do you think you could go back, or have you encountered any clients, or do you know anyone who has gone back to the bank and asked for additional money, maybe to make up that delta from what they initially got up to the 2.5?
I would do it immediately because, again, the deadline is June 30th. So, like, if you have a chance, speak to your banker, see whether or not they're willing to extend or issue a second PPP loan. But I would say that it's pretty slim that you're going to be granted one.
Right. Yeah.
Theoretically, under the regulations, nothing prohibiting it.
Right. Okay. I see someone asked, what if you used a portion of your loan for non-payroll costs and would like to essentially repay that money back to yourself so you can subsequently use those funds for payroll costs for a higher chance of forgiveness?
Yeah, basically is that, look, I mean, you could pick, again, the most favorable formula for you. If it turns out that during the 24 weeks, you used 100% of it for payroll or for paying yourself in the case of self-employed, and you're not exceeding the 15,000, then you don't have to use any of it for the rent, for the utilities, et cetera. However, the advantage of using rent and utilities as part of the formula is that those are hard costs that are very easy to prove.
Gotcha. Barry, this is just my question. Do you have any thoughts on I know there's multiple applications that have been released. There's like a easy application and a regular application. Why would someone, do you know why someone would be eligible to take advantage of the easier application as opposed to sort of the more robust, right, the robust application?
The easy is intended for below $2 million on the PPP. The longer application is intended for people above 2 million. However, it also, a lot of it has to do with whether or not you've hired the same number of employees or equivalent number of employees to who you had before. So the longer application gets into much bigger discussions of whether of staffing and the number of staff that you have now versus that you had in the early part of the year. So that's some of the reasons for using like the longer form.
Gotcha. Cameron asks, if you elect a 24-week period but do not use the full time, how does forgiveness work? For example, if using a 12 or 14-week period and then essentially running out of the money.
Again, is that the 24 weeks is the maximum. If you run out of it beforehand, then it's 100% forgiven just on payroll. So that's a very easy argument to make. So it's not that the 24 weeks is the minimum, it's rather the maximum time that you have to use all the money that was allocated for payroll as long and your associated rent, et cetera.
Gotcha. Barry, do you see any benefit? Obviously, there was a huge benefit in moving quickly on actually applying for the PPP because the money ran out. Do you see any benefit in going to your bank and filling out the application sooner rather than later? If I've already used up my money and I'm trying to get 100% forgiveness, do you think there's a benefit to filling out this application now, or would you still advise a client to take some time and see if there's any further developments?
Personally, I would wait as long as possible. Is that the regulations may get more and more favorable, the applications may get simpler. Also, the banks will be getting more used to receiving these applications. The first couple of times that a bank is going to be getting an application for forgiveness, they're going to be looking at it rather closely. If you're part of like that mainstream and flood coming in, you can understand that the banks will not be giving the same time allocation as if you're just like the first applicant at the bank going, oh, gee, let's look at this and figure out.
Really nice. Yeah. And just as a reminder, the applications will be, the loan forgiveness applications will be due at the end of this year.
December 31st. It's December 31st, and I have a feeling that, again, that will probably be extended to at least April, so that way it matches your taxes and your tax preparation, the normal tax cycle.
Mm-hmm.
And it was originally intended that, again, is that like you would have 8 weeks to spend the money, and the application for forgiveness would have to be handed in pretty fast afterwards. Now the 24 weeks from June 5th goes to December, just about mid-December, and they extended it to December 31st, probably be even longer.
A couple more questions here, and then we'll maybe wrap up in about 5 or 10 minutes, but I see a few more questions. Can you address the interaction with the Main Street loan program and how you could potentially get both loans?
Yeah, there's nothing prohibiting it because, again, is that you have, again, depending upon the size of your business, you can qualify for the PPP because the limitation there was 500 employees. And you could also be qualifying for every other type of lending. Now, I live in the town of Fairfield, Connecticut, and they came up with a new program that's a town initiative. And the idea is that they are going to be giving grants up to $5,000 for basically store owners and small businesses in which the owner is of moderate income means is defined by HUD. That's on top of a state of Connecticut initiative, on top of the federal programs. So all these things work together in providing the best relief for small business.
Gotcha. Kathleen asks, we paid about 20 people out of our 250 head count on family leave, which was credited back through FICA taxes. It did not include them in my head count for the last 8 weeks, but would it make sense to designate 8 different weeks in the future for payroll when they're back into the head count?
If you need them, I mean, if you need them for the 24-week period, and if you need them to max out your forgiveness, fine. Family leave, vacation, holidays, everything else, anything that was normal cost of a business is allowed. And again, as I said, is that you're allowed also to increase anyone's salary for meritorious or hazardous service to your company during this time period.
Gotcha. Someone followed up and said, what loan is this that you're mentioning? I'm not sure I know either. Is this is just, you just mean like additional loans, any like local loan?
There was a local loan program by the town of Fairfield. In other words, it's coming out of the town budget.
Right. And New York City has additional loans that I'm aware of, and small.
Right. And I'm aware also in Louisiana, I have a client down there, and basically there is a City of New Orleans initiative, which is pretty good, as well as a State of Louisiana initiative. So you can qualify for all of these programs, and they can all work together.
Gotcha. And I guess a last point is just a reminder that what can you just, for the pieces that aren't forgivable, what are the terms? What are the terms of the loan? So if you're able to get 50% forgiven, can you just remind us all what the loan terms are and whether there's been any change on the back end of this law?
Okay, it has changed. Is that basically you're borrowing at 1% interest for a period of 2 years if your PPP loan was granted before June 5th. After June 5th, the loan period is now 5 years. So it's really a very low interest loan for either the great bulk were 2 years, most of them will be, and some of the newer ones are 5 years.
Gotcha. All right. Seems like we've run out of questions at this point, so I'm gonna wrap this thing up. Barry, sorry, looks like we have one more person who has a question. I don't know exactly how this works. I don't see it anywhere here. Yeah, all right. So we will send around, for anyone who joined this call, we will send around my contact information, Barry's contact information. If you have additional questions, please feel free to contact us. We're happy to discuss this issue. It's very possible that we'll be doing another one of these in a couple weeks if this law continues to change. Continue to watch this space because it does seem, as Barry mentioned, it's very dynamic, it's ever changing, and it looks like the terms will only get more favorable as we go. So sit around and wait and watch this space, and hopefully in a couple months we'll all get complete loan forgiveness. Barry, thank you so much for joining us. Really appreciate your time.
You're more than welcome, Cooper. Always happy to help. And anyone out in the audience, I'm always willing to accept like a quick phone call, providing essentially my views on basically PPP and loan forgiveness. And again, consult with your attorneys, consult with your accountants, because this is really one of the most rapidly changing areas that I have ever experienced.
Absolutely. All right. We're going to stop there. Thanks so much for joining us, and hopefully all of you enjoy the rest of your week. Take care.